Okay, sound check. Looks like, yeah, it looks like things are working. All right, good afternoon, everyone. Welcome to Friday. Is it going to be a busy day for us? Welcome to the open of the London markets. Well, we are 15 minutes away from the open of the London markets. Although, technically, you actually have London traders now up, especially the retail traders. They should be monitoring the markets now. But institutionally, we're still 14 minutes or 13 minutes away from the open. All right, folks. So before we do anything, let us check at the calendar. Let's take a look at the calendar, see if there is something that we should be aware of, that we should be watching out for. Okay, if you trade Canadian dollar, Australian dollar, then you have something for tomorrow. You've got manufacturing PMI data from China. Okay, and I don't know, looks like the data is expected to be, is it good or bad? Because this is a PMI, so this is a diffusion index, which means that anything below 50 would be bad. It indicates contraction. Anything above would be good. Now, it is manufacturing data that is important if you're if you trade the Canadian dollar, if you trade the Australian dollar. Why is it important? Because essentially Canada, Australia, they are commodity producing countries. They are exporters. They export a lot of the precursor materials, meaning coal, steel, iron ore. They export all of these to China. So if there is a dip, if there is a decline in manufacturing activity, then that tends to have a negative impact to commodity producing countries. But let's talk about today, not tomorrow. So what do we have for today? We should have had PMI data already from Europe, or rather CPI data from Germany. Okay, nothing yet for the CPI, preliminary CPI for Germany, but Germany did have retail sales earlier coming out negative, really bad at minus 1.1%. And we've seen the markets already respond to that. We've seen Euro dip a bit from earlier. But what's really in store ahead of us? Key data for Canadian traders. You've got GDP. Consensus forecast barely moving at 0.1%, barely up. So what else? You have core PCE price index data. So inflation metrics, again, when you talk about inflation metrics, if these things go up, then there is that thinking that, okay, that might prevent the Fed from easing or lowering rates. But of course, at this point, the Fed has been saying that they're not really all that comfortable about cutting rates in the US because of the effects of the Trump tariffs. Essentially, they're afraid that there will be inflation in the future for the US. And I guess your PCE price index might be one of those precursor data that could give us a hint of inflation in the coming months. Okay, let me just lower the. Sorry for that. There was some auditing. All right. So, as far as our London Open is concerned, we don't have any other data to keep a close eye on. We do have Canadian data and US data later. Other US numbers, you have consumer sentiment. These are revised figures. It looks like consensus is calling for an improvement there. Will it see us with stronger dollar? We'll see, because we've had a nice run of strong dollar in the early part of the week. Okay, given the notion of inflation, and of course following the Fed's previous announcement about not being comfortable with lowering interest rates in the US at this point. Okay, now let's take a look at the charts and see what we have. So, okay, we'll be using MetaTrader for our, well, for our analytics, but we'll be executing our trades with CTrader, with our prop account with CTrader later. All right, so let's take a look at our charts then. What do we have across the board? We barely moved today, okay, after some wild ride yesterday. Why do I say wild ride yesterday? Because Thursday initially saw a stronger dollar, only to end up reversing. I actually got caught in the wrong side of that trade yesterday. I was shorting gold yesterday. All right, now so what do we have? Let me just change one of our charts. Let me just switch this. All right, so what do we have? As we said, little changed. Let me just start by taking a look at the euro. So what do we have for the euro, guys? Let me just draw some trend lines, see what we've got. You know, we have this nice trend line here for your euro, and we've actually tested that yesterday. Okay, so we are working with the notion of bullish trend lines, but are we seeing, or well, not seeing, but we do have a lower high situation here. So the question for us is, will the bounce from the trend line, will the bounce from yesterday continue, or are we actually going to just ease back down to that trend line? All right, let's see how this looks if we go intraday. Okay, sorry. This is just actually a market. Well, you're seeing the colored lines here are really just a tool that we use. Basically, it helps us identify which markets are open and see the overlaps, try to see if there's patterns between the different open markets. Anyway, what do we have when I look at the euro on an hourly basis? Well, clearly we've had a double top from late US trading that was triggered in Asian trade. How much of a pullback did we see? Because we now have a hammer developing for this latest R. And normally if I see something like this, I'm actually thinking, is that going to go up? So let me verify just how good of a hammer, or how much of a pullback have we seen that I can already say, yeah, let's buy it. How do we verify that? Well, we use our Fibonacci retracement tools. Let me just change the color. Sorry, I haven't been using MetaTrader actually for charting. I've been using CTrader. So I haven't. Let me adjust that color a little bit more. Okay, now I can see it. All right, so not even 38.2 fib. It's a 23.6 fib retracement. So a very shallow pullback for us. What was the data again from Germany earlier? Let me take a look. So Germany gave us what? Gave us bad retail sales numbers, no inflation metrics so far. Okay, so I guess I can't really base things, or I can't get a bias out of the fundamentals. All right, so given that, what's our plan? Well, we do have a big picture daily chart bounce from a bullish trend line. We do have a very nice candle from yesterday. And when we go intraday, we've already had a pullback, limited as it is. I mean, yes, it's a limited pullback, but look at it this way. This is actually a consolidation from the past couple of hours. So I could argue that your pullback generally has been stable already. A lot of people probably would have exited the market, and well, support did come in at the Fibonacci level. So what's the plan? Let's use this consolidation. A push above the consolidation, above the high for the consolidation, that's about a push above 1356.6 would have me thinking, okay, that's a breakout from your consolidation. That's a bounce from a Fibonacci retracement level. And I have this hammer in the hourly charts that tells me that there are buyers behind it. So our plan for now is to look at going long. But what kind of expectations do we have? How far, how high should we be looking at? Okay, let me take a look at our execution platform. All right, so average range for euro. Let me just get our ATR. Switch that to 20. 21 actually. 21 days in a month. So average range right now, okay, this is hourly. Go daily. Average range for euro is at 96 pips. Okay, so 96 pips average daily range. Notice, guys, that if you go daily charts, you're just moving around, or you're just above your 21 exponential moving average. Okay, hourlies, what do we have here? Looks like, okay, London market is now open. We seem to have a little bit more pullback. If that's the case, then I'll change my plan. Instead of buying at the break of this consolidation high, I would look at the possibility of a bounce from a lot of places actually. Trend line would be one, or a bounce of, oh, sorry, use the wrong tool there. a bounce from, you know what? Look at this. We always want to get a bounce from 61.8 fib retracement level. In fact, I've found that if I enter the market early, 23.6 fib, 38.2 fib, normally there's a my chances of winning is about 50-50 if we bounce off, if we use the 38.2 fib retracement as an entry. So what's the plan then? Well, if I cannot get a break of this consolidation immediately, then I would look for a bounce from 61.8 fib. If you look at your chart, there's been a consolidation actually between 50 fib and 61.8 fib. So maybe you give me a hammer here around 50 fib with wicks with tails all the way down to 61.8 fib, and given that kind of configuration in the chart, we would think about going long already, or other potential entry combinations. If not hammers, then maybe we consolidate a bit and see some bullish engulfing candles. Sorry. You can see some, if we see bullish engulfing candles later from this area, then yeah, those would be excuses for us to go long. What about selling it? Okay, people are always in a hurry to be in the market. Selling it doesn't sound such a good idea to me right now. Why? Why will I not be a seller? Because big picture tells us there's your exponential moving average. We're actually trying to go look for a bounce from that moving average, from the trend line. We're looking for a follow through to the bounce from the trend line. So selling it may not be such a good idea given proximity to the support levels, and given that the dailies actually are suggesting that we've begun the bounce already from the trend line, we've begun the bounce from the exponential moving average. So looking at this, folks, no immediate buys for us. If there is a bullish breakout, we push through this consolidation high, then I will be a buyer. Or if price action from here gives me hammers and dragonfly dojis, then yes, I will also be a buyer from that 61.8 fib retracement level. I'm counting on the daily trend line, the exponential moving average to provide us a nice cushion of support, a nice bounce off place for the euro. Okay, so again, no immediate action for us at this point. I'm actually tempted to. Okay, so should I just place our buy stop? Yeah, you know what? We can't place our buy stop. Now I'm not gonna use a buy limit. I will place a buy stop above this consolidation just in case we don't get a pullback to the 61.8 fib retracement levels, and for some reason bullish momentum develops. So we can do that. We'll place our buy above above the consolidation high. So this is your consolidation high. We'll place it above that. Yeah, we're willing to risk just 500 bucks on this one. All right, so let's, well, where should we be placing our stops? If we do get triggered on a bullish breakout, well, ideally your stop should be below that, but we'll use a tight one here. So guys, let's just see if this happens. If it doesn't, then we'll try to pick it up from your fib retracement levels, 50 fib or 61.8 fib, depending on the kind of candlesticks that we have by then. But let's move on. Let's take a look at something else. So what is that something else? Where should we be looking at? Well, we do have Canadian data later, so let's take a quick look at our loonie. Again, let's recap our Canadian data. So you've got GDP numbers from Canada. Okay, what do we know, or what is GDP? GDP is basically the measure of all the economic activity within the country. All right, so if GDP goes up, then it should be seen as good because it means that there's increased economic activity. Now, one thing with GDP though is this is basically data that is late. Okay, although this is a month-to-month GDP that's going to be released later, but more often than not, most of the time when we look at GDP, a lot of other data has been released already before GDP comes out that the forecast for GDP tend to be accurate a lot. So what am I saying? I'm saying that a small variance in the actual GDP results, normally that's seen as having a good impact in the market. So how does that relate to trading your Canadian dollar? Well, if the GDP comes out better than 0.1, maybe we get 0.3 later, then that's an excuse for you to go look for a trade that says go long in the Canadian dollar, which means that if you're taking a look at your USD CAD chart, a good GDP should see your USD CAD actually dropping. Okay. All right. I'm not really sure about this chart, guys. I mean, I'm not confident about this candlestick here from February 4. Let me take a look at our execution platform. Okay, so I guess that really happened. Two platforms showing that and all. All right, so where do we find ourselves in Loonie? We are below the 21 EMA. What's your ATR? Guys, I have to be honest, I don't normally trade Canadian dollar. So 78 pip range ATR. So it doesn't really look like you've got a lot of room there. 78 pips. Rate right now is at 38.26. So we're basically around the high for the day in Canadian dollar. Okay, so you're actually trying to break higher out of this consolidation. Now, what do we know? It is the Open of London. And you're talking about a currency that's not really or shouldn't really be naturally active at this point in time. I would have expected that nothing would be happening with your USD CAD chart. I mean, both the US and Canada are basically in the same time zones. Time zones meaning that they've got multiple time zones, but geographically they're in this range, the same range of time zones. So now is not really the time for this chart to be moving, and you don't expect a lot of volume behind what's happening at this point. So why am I saying this? I'm saying this because there's an attempt to break higher, and I'm thinking without volume, that's not going to be sustainable. So what's the plan? Well, what's the plan indeed? We do have data, and it's best to wait for your GDP numbers to be released before taking action. But what is the general sentiment? General sentiment is you have a better strength in USD CAD. A good chunk of that is really not about Canadian dollar strength, but about US weakness. Still, there is that trend. You're below your 21 EMA. If I look at the charts, if I base my support and resistances from the charts alone, I can place a resistance around your 38.15 level. So that's immediately on top of the current attempt to break higher. So I don't expect that your bullish breakout, if this really happens at the end of the hour, will lead to something given proximity to resistances. So 38, 35. Although your exponential moving average in the dailies are all the way up here at 38.63, so there's room there. All right, guys. So what do we do here? Given proximity to resistances, given the overall bearish trend, my bias would be to go look for excuses that tell me that it's time to go look for a short. We have catalyst later, as we said. That catalyst will be your GDP data. So if GDP data comes out strongly, our objective would be to try to take out yesterday's lows, try to take out your 37.84 support level. If numbers come out strong for Canadian GDP. And how would we define strong? Given the 0.1 consensus, let me say, at least get an 0.3 actual result. So do that, and we tend to think this is going to move lower. This is going to start selling off. Now, from a technical perspective, where else or when else should I be saying, or should I be shorting this? Now, guys, we did have previous consolidations, so I am not keen about using Fibonacci retracements. Okay, although if you use Fibonacci retracement, it looks like 61.8 fib is just under our 38.35 chart-based consolidation resistance. So what am I saying? I'm saying that there looks to be good argument to go look for a sell from this level. And a sell from that level means go look for these kinds of candlesticks. A gravestone doji or a shooting star coming from 61.8 fib of yesterday's move. Although, like I said, guys, when you have consolidations, it's better to just use your support and resistances from the consolidations rather than relying on Fibonacci retracements. So no immediate action, but willing to take a bit of a sell from 61.8 fib at 38.32. Probably better 38.31. Stop losses will be above your consolidation high. Our objective, a retest of yesterday's lows, and possibly if your GDP numbers come out really strong for the US, possibly think in terms of getting rejected from your daily EMA, making another run for your lows. You know, you started Monday with a new low. So the better the data, the better the GDP numbers are from Canada, the more that I'd be looking for a resumption of your overall sluggish but bearish trend in dollar CAD. So again, nothing immediate for us to do. I'm beginning to think that it might be better to just do our sessions during the release of data. At least you see some action. But remember, you're here to trade, you're here to make some money, and you're not here to get an adrenaline rush. Okay? If you're the type of trader who is trading because they want the adrenaline rush, then maybe you're not in the right profession. Your purpose as a trader is to try to get some money. And people who live on adrenaline rush, maybe you should go do extreme sports instead. Okay? You want consistency. You want to, I'm almost tempted to say that you want to be like a robot, to be unaffected by what's happening in the market. So yeah, nothing immediate for us to do here. Just monitor the data later. But if you start seeing shooting stars and gapestone dojis from 61.8 fib, then you might consider shorting ahead of the actual release, ahead of the actual data. Okay, let me go back to our MetaTrader platform and see what else is there. Okay, so it looks like your euros really pulling back. We'll try to pick it up from that 61.8 fib retracement level then, instead of that buy stop that we've placed. But again, you don't just go in because the fib retracement level has been hit. You wait for the candlesticks to tell you that timing is good already, that the drop is already over. Okay, so what else looks interesting? Dollar yen. All right, so what do we have for dollar yen? I think we've got a big triangle here. Triangles are signs of indecision. And we're right in the middle, smack in the middle of that triangle. Had a very bearish candle from yesterday, and your attempt at a follow-through sell-off from earlier did not really find traction. Was there any release out of Japan earlier? Let's take a look. Okay, so CPI data from Canada, from Japan came out strongly. Okay, so actually you've got good CPI numbers from Japan. So inflationary numbers. Your retail sales also picked up. So these are actually arguments that call for a stronger yen. And I think that your charts did show a stronger yen earlier before pulling back, before the bounce that we're seeing right now. Okay. So very indecisive, but bearish candle. How do I go hourly? Intraday. All right. Looks like some indecision again. Technically, this would have been a bearish candle. This would have been bullish. But look at your chart. You have a lot of indecisions. High wave spinning tops, or even small bodied spinning tops. So there's a lot of indecision, here. I think the more prudent course of action is to use your Fibonacci's once more in order to figure out where to sell this. Why not buy it? That's actually a good question as well. Why not buy it right now? After all, it's exhibiting a bounce. Okay, so this is our latest upswing. Let me drag fibs to that. You know what? That actually looks like buying might be a good idea. I just hate going against the daily chart. Your long wick from yesterday. But what are you presented with? You have a bounce from 61.8 fib retracement. You have a bounce from 61.8 fib retracement. This is actually very good looking. Now, this isn't really the natural time for dollar yen to be moving, but remember, you do have European traders, you do have people who trade euro yen, GBP, JPY active right now. So those could be the ones that dollar yen might be just being influenced by those types of guys trading in the crosses. So what's our plan here, guys? Okay. I think the prudent course of action would be to wait for a close above 50 fib retracement, above your 144.18 level. What's our ATR again? ATR is at 165. Okay, so a decent ATR here. And low for the day is 43.37, high is 43.16. So you're basically looking at having had half of your average daily range for dollar yen. Okay, let's revise the plan a little bit. I see that in the hourlies, you're just below your exponential moving average. So the more prudent course of action would be to go look for a close above the exponential moving average. before thinking about going long in USD JPY. All right, you know what? Next time I'm just going to consolidate us into just one single platform and not confuse you guys by moving from one charting system to another. But let me add an exponential moving average here. Sampling period of just 21. All right, so we want to have a close above the moving average to be confident that this bounce is going to continue. But we have the elements of that happening. You're coming from 61.8 fib, you've had long tails in the hourly charts. You're basically go dailies here. That's a problem. Well, you've crisscrossed the daily exponential moving average, so I'm not really going to have any problems with having 44.49 acting as a resistance. All right, guys, so yeah, we are bullish here. We just need an hourly close above the exponential moving average to be confident that this bounce will continue. At least maybe see 44.68, if not pushed to the highs from yesterday. Okay, so I guess it's really another boring session, guys. No immediate trades taken. Things to watch out for again. You have your data from Canada. You have your final figures for consumer sentiment from the University of Michigan later. The numbers point to some positive results from the US. But given how things are, I'd be more confident about responding if the numbers do fall short. Okay, guys, so thanks for joining and hope to see you on Monday. All right, hopefully we'll be able to do a class on EA programming again by next week. I'm just finishing the presentations for that, the PowerPoints for that. Basically, I want us to come up with a clear, structured course on that, and not just go jump in and talk about how to use your Groks, your DeepSeek, your ChatGPTs to do coding. Okay, we want a program that would clearly teach you programming concepts along with how to do your prompt engineering to come up with the solutions that you want or that you need. Anyway, thank you for joining, guys, and again, hope to see you next time.